how much money do you actually need to start flipping property? Now, there's a whole bunch of different ways to finance property flips. Using mortgages isn't a great idea. It's not something I'd recommend. Mortgage lenders are in the business of long-term lending. They don't want to be lending on a short-term basis. That's not their business model. So the problem is, if you're using mortgages to fund flips, it can actually become a problem for you in some cases in the future. So say, for example, you're buying your own home or you're looking to buy an investment property. If you've been using a bunch of mortgages and paying them off for your flips, that could go against you. Lenders might be thinking, well, we don't want to lend to you again because you're just going to pay it off over the short term. That's not our business model. So I don't recommend using mortgages for flips. An alternative is using bridging finance. Now, bridging finance is typically more expensive than mortgages, so it's something to bear in mind, but it's specifically designed for short-term lending. For buying properties that you plan to flip, it's perfect for that because the lender is have the understanding you'll be paying off that loan over the short term and they're okay with that. Now, be aware if you're using bridging finance that it's not just about the interest that you're paying that's important, it's about all the additional costs. Typically, there's going to be an arrangement fee that could be in some cases 2%. That's the last application I looked at. It was 2% to arrange the loan. Legal fees. So in some cases, that could be £1,000 or more just for legal fees. And there might be additional fees as well. So make sure if you're talking to a bridging broker, which I'd recommend you have a conversation with to look at bridging finance, ask them these questions. What are the total costs? Not just the interest rate, because that's really crucial when it comes to working out your profit margin on that next deal when you truly understand all your finance costs. But bridging is great because it's quicker than mortgages, which is good if you're looking at buying auction properties. Like a lot of properties I buy at auction. So that's really important. This property here that I'm in, that I'm actually currently refurbishing, wasn't an auction property. This was actually an open market deal, but most properties I buy are actually auction deals. So if you want to buy at auction, then being able to move quickly is key, and bridging finance is great for that because of the speed at which you can get loans and you can move quickly. And typically auctions will have a deadline of around 28 days. So from when you've actually got that offer accepted. So bear in mind, that means you have to move quickly or you could be at risk of losing some fees, losing some money that you've actually put down to secure that property. That's not what you want to be doing. So bridging finance can be really quick. Typically, this might vary, but typically you're looking at putting down around 20 to 30% deposit on that bridging loan. Now, that's to fund the purchase price. So some lenders might lend on the refurbishment cost as well. Some won't. They'll just lend on the purchase price. So it depends on the situation. It's always good to ask so you can be sure and you know how you'll raise all of the money to do that next deal. But typically, factor in 20 to 30% you'll need to put down for that purchase price, and then you get funding on the rest. And there are situations where you might be able to get more than that. You might be able to get 100% funding. In some cases, if you have other assets that you can offer up in terms of value, then that can be possible. You might be able to leverage against another asset that you own, such as an unencumbered property, so a property with no mortgage, something like that. You might be able to leverage so you can actually get 100% finance. In most cases, you're going to be putting down a deposit. So, of course, it depends where you are in the country to determine what is that initial cost that you need to put down to get going. So you're typically factoring 20 to 30% of purchase price, and then on top of that, your buying and selling costs and your refurbishment costs as well. If you can't get them funded by the bridging lender, you'll have to be putting them in yourself. So that's something to bear in mind. So if you're doing some numbers now, thinking projects you might have looked at, that's what you're looking at. Those are the kind of costs that you need to factor in to get started in property. Now, depending where you are in the country, that might be as little as 50k, or it could be much more than that if you're in a lot more expensive areas. So bear that in mind when you're factoring in getting involved in flipping property. But here's the thing, bridging finance can be great. These strategies or these finance options can be great to fund properties that are properties you need to buy quickly. So you might be buying them, like I said, at auction, or you might be buying properties where the seller particularly wants a quick sale. And the reason they're taking your ridiculously low offer is because you said you'll move quickly. So that's why bridging finance can be great in that situation. But what I've done a lot of times, I've funded a lot of my projects, including my first flip project, is using private finance. So private finance is just money from individuals. So not banks, not bridging companies, just people that have cash and they want their money to be working harder than what it's currently working in the bank for them. So if you can offer a proposition, if you can offer a project that's good enough where you can show that they'll get their money back, you can actually borrow money, give them a return on their investment, so giving them an interest rate on their investment, and you can actually get that deal funded. So I've done that many times. I've raised millions of pounds of private finance, and that's helped me move my property flipping journey forward a lot more quickly than if I was just relying on my own funds. That's something which you can create a win-win scenario for yourself and your investor. They get more money on, they get a higher return on the money they've got that you're utilizing in your next project, and you fund your next deal. It's a win-win scenario when it's done right, and you're protecting the interest of yourself and your investor by doing things properly, having the right paperwork, using a solicitor, doing things right in that case. So that might sound, to some of you, if you're looking at this for the first time, you look at getting into property, it might sound too good to be true. Getting a property in and not having to put any money in and doing all these projects. And we've got to bear in mind is there's countless examples of entrepreneurs who've gone on to be incredibly successful, creating their dreams, creating their businesses from scratch, who utilized other people's money, not necessarily just the bank's money, but other individuals' money. There's enough examples out there showing that that's possible when you have a viable business proposition. And property is no different. Property is one of the best things to invest in because yes, a project might take longer than expected in some cases. Worst case scenario, it might cost you more than you initially expected, especially if you're new to property. These things might happen, but the reality is it's always going to be worth something. And it's a great asset for an investor to feel that they've got something that's secure. So the money is not going into some business idea that might actually go tits up, might fall apart. This is property, and realistically, properties always have a certain value, which is why banks are so keen to lend on property as well. So it's a great proposition. But if you're new to property, you might be thinking, hey, why would they invest in me? Because I've not done this before. And here's the thing, my first flip was funded by someone else's money. It's not something you have to feel like you've got to have a load of experience before you can leverage private finance. Your next investor could be someone you know, could be friends, could be family, could be a colleague, could be someone who's got money sat there, might be some inheritance that's not doing anything. And actually they're just waiting to invest in someone that they trust, that they like, that they know, that's going to be able to deliver, that's going to be able to get a project that will actually make a decent profit. It's not about having to convince yourself that you need loads of experience. Some investors might want loads of experience, that's fine, but you only need one investor to get started. And so I didn't have flipping or property flipping experience when I started, but it's crucial that if you back yourself, you understand you're going to make a project work and you become an expert finding a great deal, then the money will follow because you'll be able to show to your investor the purchase price that you're paying, the end value, what it's worth, what you're going to pay on the refurb, and they can see firsthand, you can share that with them, how much profit you'll make. So if you find a fantastic deal, then really, in most cases, the money will follow. Become an expert at finding a great deal, and that advice hopefully is useful for you in finding that next flip project. Hopefully you've enjoyed this video. If so, go ahead, hit that like button and subscribe to this channel, and you'll see me again in the next one.